Hello everyone, it's Sean here, and I'll be giving you an outlook for the next trading month, which we're proceeding into. And please forgive me, today I do not have access to my PC. I'm a bit far away, and I've been getting pressure from you guys saying how far with the outlook. You're all waiting for it. And so I just had to use my mobile. So you gotta have to deal with it, right? Just for this video only, right? And so the pairs that we'll be looking at, just mainly Euro USD and a bit of some GBP USD for reference, right? For reference, or maybe just mainly GU, right? Because it's the one that I'm liking these days, right? So in this video, I'll be not only just giving you an anticipation for this next trading month, which is spoon feeding, right? That's not my goal for this video. I'm also going to be giving you some valuable knowledge along the way, right? A bit of it, right? Of course, I can't give it to you. I can't give all of it to you, right? So for your growth, I'm going to be giving you some important knowledge as I'll be doing this pre-market open outlook on what? On GU and EU. And this outlook is for this next trading month that we are going into. So the objective of this video is to give you an outlook for this next trading month, or to give you a bias in the draw of liquidity for price as we proceed into this next trading month. So I hope you listen diligently, and I hope you find it insightful. Right. So I shall already start giving you a valuable tip, right? Which is that with analysis, always start with time frame selection, right? If you're not doing time frame selection, I don't know how you're trading, and I don't know how you expect to get results from trading without the knowledge of time frame selection or applying time frame selection to your analysis. How do you even know where to start from, right? And that's the reason why most of y'all getting wrecked, right? You just randomly say, I'll start from the 4 hour. I'm just gonna open the 15-minute chart. You don't even know where to start from. Am I lying? Right? And you don't even know why you are starting from where you are starting from. So yeah, the rabbit hole goes deeper than you think. But of course, I can only go as fairly deep as I can in this one video, right? If you're interested in learning more, you can look for my Twitter, right? Or I'll try to put a link in the comment section, right? Or description box, which can lead you to my Twitter or my WhatsApp group. If you get to my Twitter, you can get to my WhatsApp group, and that's where you can get me, right? I'm the only admin in there. That's where you can direct message me. And I basically offer a coaching program, right? Whereby I teach people individually, right? One-on-one or 1v1, whatever you call it, right? So if you're interested, you can just look for me via the link that I shall post in the comment section. And of course, to grow the YouTube channel, guys, this knowledge that I'm giving you is not something that is being shared anyway, just to be honest, right? So please like, share, and subscribe, and show a vibe in the comment section, so that when someone comes across the video, they may just go to the comment section and see the good comments, right? If you're being honest about the video being bad, you can even comment bad stuff. At least I'm trying to learn, right, as a content creator, not as a trader, right, to make the content better and grow the channel, because it's also part of my aspirations to build an academy where real, consistent, profitably consistent, profitable traders can be cultivated from. It's an aspiration that I have, so it's necessary for me to be doing this kinds of stuff, as posting outlooks, right? To show you that you can actually learn something valuable off from here. So without wasting much of your time, let's get into it. I was talking about time frame selection. This is just a video, guys, right? To just give you a brief. And another thing is that analysis and execution are two different things. If I give you an outlook, I did not give you a buy or sell entry, right? And another thing is, even the richest traders you may think of, you can have your outlook wrong, right? But it doesn't mean that your execution becomes wrong. I see people make a fuss out of this all the time. You post a monthly chart expecting higher prices for the next month, then price does not do that, and you start to say bad stuff about that guy. It's normal to have an outlook and price go against that outlook, but it's the execution as well that has to be properly linked with the analysis for you to be said that you have entered the trade. So it's completely different, right? Execution is something that I look into deeply in my system, which I teach, of course. Once again, you know how to look for me if you're looking to be taught, right? Which is the only thing that I offer, right? I only teach, right? Yeah. So just use this outlook as an outlook, I guess, right? Sure. So the first thing is time frame selection, knowing where to start from. So basically, if please excuse me in terms of the ads that are popping up, this device that I'm using, it's just a random trading view that I downloaded, so of course it's not subscribed just yet, right? So you just have to deal with the ads for today, right? So don't complain. To get back to what I was saying that time frame selection is based off time, right? What time are we in right now? We are moving into September, last month of the quarter, right? Last month of the quarter. And since it's not the start of a new quarter and it's just the start of a regular month, then normally you should just be starting from the what? From the monthly time frame, right? You should be starting your analysis from the monthly time frame, right? I have a whole criteria for time frame selection, right? Of course, I won't go deep into it because I don't have all the time in the world, right? Plus, yeah, that's pretty much it. You start from the monthly, and if you start from the monthly, then that means everything else flows perfectly, right? Without confusion, right? There won't be a reason to be going higher, right? If you're going higher, then maybe there's a really, really specific reason you're doing that. But we've already done things that have to be done on the higher time frame when it was time to do that, right? Like at the start of July, when it was the start of a 6-month period and the start of a 3-month period. And like I said, I'm going to be giving you some valuable stuff And I'll be giving you firstly the time frames that I use, right, for time frame selection. I have the 12-month chart, 6-month chart, 3-month chart, right? And I have the monthly chart, weekly chart, daily, 4-hour in conjunction with the hourly, right? And lastly, the 15 minutes, right? Or the 5 minutes and 1 minute for the advanced, right? So these are the only time frames that you need, right? Those are the only time frames that you need. You don't need to look at anything else, right? I just gave you something, so you have to appreciate. So as you start your analysis, what is analysis? Analysis is basically coming up with a bias and draw of liquidity, right? Since it has nothing to do with executing or pressing buy and sell buttons, analysis is determining where price is going and the particular price movement you're expecting, which becomes your directional bias. It is, right? Then let's get into it. So right here on GU, what can we see in terms of our analysis? Our analysis always starts with order flow, probing, right? Order flow. In terms of order flow, okay, what can we see? Is price rejecting lows? Is a price breaking highs, right? And among other intricacies such as PDRAs, right? If price is filling in bullish gaps to create higher prices, then you can safely assume that price is what? Is bullish, which you can all clearly see, right? So I don't have to mark this for this to be clear. You can see price is rejecting the lows and breaking the highs and being bullish, right? But then beyond this normal probing order flow analysis, there's an important law that you have to always have in mind. It's really important, right? The funny thing is I say it's important, but after the video you forget about it as if it's useless, right? So then you're still not profitable, right? And you think it's about some other reason, but maybe the first reason is you don't even listen actively, right? Or you don't pay attention, you don't take what you're being given seriously, maybe, right? Just maybe. I've been there, so I'm trying to help you notice some issues that you may have that are stopping you from achieving what you got to achieve, right? So beyond just probing order flow, just looking at highs and lows, there's an important law that you have to understand about order flow, that price is only bullish or bearish on a certain time frame until a higher time frame key level is what is mitigated, right? Your 1 minute order block has no power in the face of a 15-minute order block, right? Your 4-hour order block makes no sense in the face of an opposing 4-hour fair value gap, right? Your daily fair value gap makes no sense in the face of a weekly breaker, right? Weekly level in general, right? If you did not take into account what I gave you, that's your own fault, because what I gave you is important and valid, right? And it opens the door to a lot of stuff, right? So of course you have to go back to my videos to see what I did in July, right? That's when I looked at the 6-month, right, and 3 months, right? But we could just go there in order to see if we are dealing with higher time frame key levels at the moment, right? And you can see that on the 6-month chart, we had this huge range framework, right? Price bridged the low, right? And so we started to assume bullish prices, right? Since it was bridged. And so price was moving in a bullish order flow state. You can see the engulfed down close candles are being used in order to what? To create higher prices. And at this moment, we had this what? We had this other engulfed bearish down close candle, right? Created. And of course, since the draw of liquidity, I already did this. So I'm just rushing through, right? So that when I reach the monthly, y'all understand what's going on. So until we reach this draw of liquidity, indeed, we follow that order flow of price being what? Bullish, right? And we expect this bullish PDR raise to be propelling price towards that draw of liquidity, right? But yeah, that's pretty much it. So we do have a higher time frame key level, which is this one, right? This order block. The reason why I wouldn't be looking at this one, which I know you're all asking about. All order blocks are valid, by the way. All that you hear on YouTube and on Twitter lies that there's an order block. That's invalid. An order block is simply an engulfed up close or down close candle, and that alone qualifies it to be an order block. But there are order blocks that are high probability than others due to context, right, of liquidity, right, of draw of liquidity, and even bias, right? Yeah, so keep that in mind. So yes, we have a higher time frame key level, and we expect this higher time frame 6-month OB to be used as a propeller for price towards what? Towards that high, which is my draw of liquidity, right? Yep. And so moving on to the 3 months, it's also pretty much it, right? We have this old low high, which was mitigated. And on EU, it was not mitigated. That's also another discrepancy, telling you that you're most likely to be anticipating higher prices, right? Then we have the monthly chart, which we now proceed into, right? And as we go on the monthly chart, what do we see? We see that we've paged into a higher time frame OB, which is this one, right? And so, yes, price did purge liquidity, like so, right? And created this one that should so-call a high probability order block. But the reason why I will lightly look at this as an order block is because price is coming off from a what? From a higher time frame key level, bullish key level. If you go on the 3 months chart or 6-month chart where we are seeing this key level, you will see that there is no order block, right? That's against this. Remember, the higher you go, the more clearer it is. The lower time frames is always just noise, right? I hope you're taking all that down. So how can I expect bullish prices if I'm to evaluate that my draw of liquidity is the buy side and my bias is bullish? How can I verify that? First of all, highs and lows, right? I expect a low to be rejected and highs to be broken. So particularly looking at this is an important point to look at, right? The low candle low of July. July is the first month of the quarter, right? So it's bound to be a range. So if this month is so the second month is a month dedicated to manipulation, right? So then the third month, if the second month manipulated, the third month you are most likely to expect it to be what? To be a distribution. So that means my expectations on the monthly in terms of draw of liquidity, I am expecting price to be reaching that high. Sorry, I just marked it wrongly. It's supposed to be draw of liquidity right there. I'm expecting in September price to be reaching that draw of liquidity, right? If price chooses to go down, maybe, right? Remember, if price is bullish, you buy below, right? Maybe price might keep on going lower, right? Price did make these equal lows down there. So for precision, maybe, just maybe, that's where price might create the directional hook. But I'm not worried about that or even concerned because price has already mitigated a higher time frame key level. All these down close candles that you can see 1, 2, 3, 4, that's a higher time frame OB, right? That actually purged liquidity down there, right? And so that alone should give conviction of price to reach that draw of liquidity, right? So in terms of my draw of liquidity, I've made it clear. And I think I also used the CRT concept along the way, right? When I talked of this quarter, right? July being the accumulation phase, August being the manipulation, and I'm now expecting September to be propelling towards the what? The draw of liquidity. So that's my outlook on the monthly, right? So if I'm concerned in speculating this market, I'm looking, and I'm not just speculating this market, but speculating at a monthly candle range level. Then I'm marking my monthly opening and my monthly closing and expecting price to dig below into a lower time frame key level and buy below and target high towards the draw of liquidity, right? So right now I just used order flow to come up with my bias and draw of liquidity, maybe with CRT as well, because my bias automatically becomes bullish towards the draw of liquidity. But the rabbit hole goes deeper than you think. There are a lot of stuff such as discrepancies, and a lot, right, along the way, like quarterly shifts, right? Knowing that each and every 3 months price will make a shift in order flow, right? It's a lot, and I just had to just use order flow because it's the one that's key. It's the one that makes a bigger part of the evaluation process, right? But it's good for you to know that there's a lot from where that will be coming from, right? And so then we move on to the weekly, right? On the weekly chart, what can we see? On the weekly chart, we are coming off from a higher time frame key level, like you also, right? We're coming off from a higher time frame key level, and we're expecting higher prices, and you can see that price just perched below this low right there, right? Made this order block, right? And price disrespected this up close candle that could have possibly produced lower prices, actually engulfed it because it closed above the body, right? That's also part of some price action detail analysis, right? Yeah, there's a lot to learn, guys. So if you think one video will just do everything for you, you're wrong, right? You just have to do what has to be done. Learn. After you've learned, then you do whatever you want to do. So yeah, and so it signifies a shift in order flow, right? That's a mistake that people think. They only think that a market structure shift is actually a break above a high. Seeing an order block being disrespected and an opposing one being respected is a huge sign of order flow, right? Is a huge sign of order flow shift. Sorry, right? Yeah, I've said enough. And so moving on to the weekly. An important thing that I want to let you know as we move on to the weekly is that the first week of the month is low probable if you are a monthly candle range trader, right? The best choice is to usually wait for week 1, right? Then you trade week 2 and week 3. Why? Because every time market opens, it generates interest, right? You don't know where the market is going. You don't know how the market is going to move, right? You might know where it is going, but you don't know how it's going to move. That is your bias, which is important, which affects your execution, right? Yeah. So that's why it's best to skip week 1. It's not because you're scared or whatever, right? It's specifically because of what I said, right? So this is the key level that I expect to see higher prices be formed from, right? That specific order block. And as you can see, price formed a range at the order block. You can see this candle, right? You should also be looking at euro for what? For SMT reference. I'm not gonna lie to you guys. SMT is it's a huge core part of this system, right? Look, as you can see, last week, this Monday 18 August week was purged below the low. But now look at GU. On GU, as you can see, price did not purge. So that's what an SMT is called. So that means you're already anticipating that high is now a draw of liquidity. You see how your draw of liquidity has been brought from up there to down there. That's called precision, right? Especially if you're a short-term trader, right? So I'm giving you ideas, guys. I cannot spoon feed you, but I'm trying to open you, right? I know so much to the extent that I can't just provide it freely. If I provide it freely on YouTube, it will be scattered, right? That's why I made my coaching program where it's easy and simple, right? You just join the coaching program and I'll be teaching you one-on-one, right? Of course, the number of people I can teach is limited, but that's the only way to learn everything I know in a certain order, right? Because it will be time consuming and That's the best way to learn, right? So that's the best thing you can ever be offered. Who knows, maybe in the future, I my schedule might be saturated to the extent that I can keep on doing individual coaching program, right? So this is the time, guys. I just want to be honest to you as a person who has been trading for the past 6-7 years. I know what it's like to lose, right? I know what it is like to lose, and I could never afford being in that kind of situation. So if I'm going to give you the best advice as a friend, right, or even as a mentor, is to tell you that if you have an opportunity to actually learn the right stuff, then you should take it, right? But because in the future, regrets are very popular in the future. So yeah, it is up to you to make decisions, right? And so that is my draw for liquidity and my bias automatically, since this would be acting as my candle range, right? Because of the SMT, because of the presence of a key level as well, right? Those are code protocols that CRT follow for it to be valid, right? That's also another some other stuff to know as well. And so automatically my bias on the weekly becomes bullish, right? No reason to be bearish at this particular point. Completely no reason. And on the daily, what can be seen on the daily? The daily was quite interesting, if you ask me. On the daily, what's interesting is the range framework, right? You can see that price formed that high and this low, and price has been ranging. So price is ranging, and price is most likely to reach either of these bounds, right? But of course, only one bound will be reached first before the other. And of course, since we already discussed about the higher time frame key level, you know which bound is most likely to be reached, right? Or which end is most likely to be reached. And so with that said, that's quite interesting, right? So that means my draw of liquidity on the daily is bullish as well towards that range high, that same particular high, right? Of course, on the weekly chart, it's refined better, right? That very high. So that's where you'll be expecting price to go. So, and then bias, just like what I said about when price opens, it has to first generate interest. Then you have to wait for Monday, right? Remember, you may know where price is going, but bias can mostly be formulated after the first phase of the opening of the candle, right? Yes, yeah, there are advanced protocols that can allow you to trade on Monday. Of course, I trade on Monday myself, but I think I've simply made it clear, right? And so the best way to evaluate a daily bias to say that Tuesday is bullish is when Monday is printed, right? Because we have something called weekly profiles, right? Yeah. So where we are looking at the behavioral characteristics of every single trading day of the week, right? And so then what we have got right here, price last week purged this low, right? Created that OB, right? And so you can clearly see even that price has been rejecting lows as well. So what I'm doing, I'm probing order flow, and that tells me in what character price is moving. and price is moving in a bullish character or in a bullish state of order flow, right? So what do I expect going into Monday? I either expect a low to be rejected, a gap to be filled, or a down close engulfed candle to be mitigated. Then I can expect higher prices, right? But as you can already see, we see price coming off from rejecting that low, right? And actually mitigating this rejection block, which is a key level. And so if I'm going to give you a symbol anticipation for Monday may probably be most likely going to create higher prices, right? But I think I've already made it clear about it being important to wait for Monday first, then Tuesday, because the longer you wait, the more precise you are, right? The less you wait, the more losses you take, right? Remember, the wins that you're going to get this week, if you're going to get any wins, are already fixed, right? That number cannot be increased or decreased, but the number of losses are always up to you, right? Yes, it's up to you if you're going to take one loss this week or two losses or five losses. It's up to you, but the number of wins can never be changed. So once again, it's up to you to decide whether you're going to be focused on waiting for those scarce wins, or you're going to be impatient and take losses until maybe you can just get that one win, right? That can probably neutralize your losses or still remain in a loss, right? So I think I've made things clear, guys. This is an outlook, and I think I've made myself clear. I've given you a bias. I've given you the draw of liquidity. I've given you simple expectations so that when you do your analysis, you know where to think from, right? In what view to think from. So with that said, I can give remarks on my video. If you found this insightful, please like, share, comment, and subscribe. And if you want to learn ICT and CRT in compressed, consistent system, right? Top-down system, everything straightforward, right? For you to be consistent, you can look for me via the link that I shall be posting in the comment section or the description box, right? My advice to you as someone who is experienced is, once again, if you get the opportunity to learn the right stuff, then take it, right? Yeah. If you believe that trading can achieve all your dreams in life, right? If you believe that trading can achieve all your dreams in life and you are greedy on putting your money on education, then you're acting like a fool, because how do you expect your dreams to be achieved? Guys, I could emphasize this over and over again, but I can never emphasize enough, right? So with that said, and until then, have a good trading month and a insightful video, right? I'm looking forward to be getting comments as well. I expect a vibe in the comment section so that I can produce more of these, right? So cheers.